to the Trading Market Technicals Morning Call video for Monday, June the 10th. Hope everybody had a great weekend. Friday, we got a continuation bounce from Thursday's low. And to be expected, we were oversold. I mentioned that on the McClellan Oscillator Thursday and Friday. Watch for a bounce. Now, how can we measure the bounce? Well, some sectors, as far as the Russell and the transports, had a better bounce than the other sectors that we follow. I'm going to go into that in a moment. So today is going to be important, and I'm going to show you some trend lines that I'm watching for today to see if we continue or if we just kind of roll over and die and start breaking lows. And I mean that in the short term. I think the overall picture, I have a lot of charts to show you and indicators look really, really well. And I think that the overall fund managers are buying dips as we speak. And so I do think that in the longer term, the market looks higher. And I think we do close higher by year's end. But in the short term, things are getting a little bit shaky. Now, we could just continue to grind higher from here. And I will say that if we take out a couple of key trend lines here, we could at least test the highs again. So that's why I always say we don't want to be short. And I mentioned that being Thursday and Friday. And Friday was a very, very quiet day. Even though the markets did bounce and were up, it was relatively quiet as far as day trading is concerned. However, let's take a look at the board, and we can see that we were up pretty much just about 3/4 to 1%, not even, just under that. Dow, S&P, Nasdaq, you can see here. Semiconductors, everything was nominal gains that recovered from the Thursday and Friday bounce that we were looking for, and mostly short covering rally from there. But now let's get into some of our indicators. Now here's the NYMO, and I said, I'd like to see this market get right in this area here, 30, 40, make that little bounce, that dead cat bounce, and then start to roll over again. Now, I would even prefer another rally today, and then we start to roll over and sell off tomorrow. Maybe catch that trend line, which I'm going to show you. So, but as you can see, this is a very viable indicator. And I've been saying that look for a bounce, look for a bounce. Thursday and Friday, we got a great bounce. So even if you were position guy, position trader, and looking to position yourself, you could have bought the market at the lows, would have stopped below the lows, and you would have made some nice money Thursday and Friday. So I'm looking for maybe a little continuation right to this area here. It's a 20-day moving average within the Bollinger Band. So I'm looking for maybe a test here, and then we'll see what happens with the market, see if the market were to fail. Now, what's again concerning, right? Copper sold off the 2 days that we got the market bounce. So not looking too good here. And again, at one point in time, if this sells off, we are going to, I think the markets will play catch up. And again, I'm still looking for a deeper downside correction than just 2 days. Last night, we had China came out with some numbers, industrial production, retail sales, consumer price index, all lower than expected. And I do believe that China is the canary in the coal mine in the coming months to come, to get that final phase of a meltdown. And I do think it's probably going to be sometime in the summer or early fall before we get that Santa Claus rally again. Again, longer term picture. Take a look at the weekly chart. We're still hovering right just below the 20 and the 50-day moving average, the 50 weekly moving average. So again, not looking too pretty. We still got lower highs, lower highs, lower highs. So we still have bearish symmetry here. So I would just look for lower prices in copper. Copper's down 1% right now as I record this in the early morning session. Take a look at our NASI weekly, and that has been on a sell signal for the last 2 weeks. So that is telling us that the markets are continually looking for some lower prices to come. Again, a bounce is a bounce, guys. Remember that. And we want to see if this market does have a little bit more legs. But right now, NASI weekly don't look too good. And then if you look at the that's the New York Stock Exchange. I'm sorry. This is the Nasdaq. Nasdaq is not quite on a sell signal yet. As you can see here, we just kind of crossed over it. So this week will be a deciding factor for the the Nasdaq summation, excuse me. So we'll just keep an eye on this as well. But we do have a sell signal on the New York Stock Exchange summation index. Okay, new highs, new lows. Again, look at that right to the penny, zero line, and we bounced. So far the pattern is still bullish for stocks. So we're holding up new highs, new lows above the zero line, and as we continue to break and hold these lines higher, this is bullish. But when we start breaking low below the zero and we hold below zero and start to tick lower, that's actually a bearish signal. But right now, nothing wrong with this at all. Okay, so again, mixed signals in our indicators. Here's the tick chart as well. End of day tick. Broke below it, came right back above it. So again, holding the zero line well, still bullish in the tick. Now the bullish percent index, what I did was I wanted to show you every time we had a cross, the markets actually rolled up and then rolled down, as you can see here. Moved lower. And then here higher, higher, and then now lower. And we're moving back up again. So this is a long way to go to the 8 MA. So we'll see. We'll see what happens if this does produce some sort of maybe a little bit of more of a test and then fail again, maybe test the line on the moving average and then rolls back over again. But we'll see. But right now, this is still on a sell signal. Stock's above the 50-day moving average, as you can see, still on a sell signal. Looking to cross, but still on a sell signal. Stock's above the 200-day moving average. Did give us a buy signal on Friday. And this is good. This is a good sign. Again, as you can see here, still constructive, guys. I mean, I wouldn't want to be selling the market here. Like I said, unless you caught it early on in a week. That's why I said Thursday and Friday we get a dead cat bounce. But dead cat bounce could gain some momentum. And then if we start to move any higher, I think shorts are going to cover again, and like they've been doing for Thursday and Friday, and push this market at least to test the highs here. Okay, take a look at, speaking of China, let's take a look at Shanghai. I haven't showed you this in a while. We had this big bull flag. We broke out of it, and now we're breaking down again. Okay, eventually, when the world markets start to break down, and we're the only ones left, what's going to happen? It's going to break down with it. There's nothing more you can say. It's very difficult for the U.S. markets just to hold up while every other market in the Asian Pacific Rim, the European markets start breaking down. So that's something you really got to keep an eye on. Again, longer term picture, but take a look at China. As you can see here, the FXI held up on Friday. China now is down, so if it stays this way, it'll break Thursday's low. Okay, and then of course the emerging markets, which I want to show you right up in here. Same thing. But again, we're at the lows here. This is a good spot. A break below this, guys, going to be looking to test 39.50 and then 38.50. So this is breaking down relative weakness, lower highs, and now we just broke down here. So not too good. That's the bearish camp. If you are a bear, that's what you're looking for in a bearish camp. Take a look at the 10-year yield, 2.17, holding above the breakout line. Very, very bullish. I do think yields have bottomed. Long term, we were in a bear market. I think that's changing. And let's take a look at lastly is the dollar. Dollar did bounce, right? We got a little bit of a pop. Dollar took the 200-day moving average and bounced higher. So to be expected. But, again, as you can see here, the indicators are telling us that we do have some mixed bag. We're still bullish, right? We did break the 20-day moving average, but we held the 50. And here's the S&P cash. Now, here is the line in the sand. So I say today and tomorrow is going to be really important. This little downtrend line, lower high, lower high, lower high, lower high. We had the 2-day recovery rally, and we're just underneath the 20-day moving average now. And that's about 50% of our move, and I did the fib number, but it was so close. I wanted to make it clean for you guys. So we are at the 50-day moving average. I'm sorry, the 20-day moving average. We bounced off the 50. So if we start to break out of this, you could even look at this as a big bull flag right from here. As you can see here, I didn't want to write this area here. So this could be just a big bull flag with a flagpole, and then we break out, at least test the highs, and maybe make new highs. So you can't rule that out, guys. You just can't rule that out. Okay, take a look at the monthly chart of spiders. Room to go here, as you can see, the uptrend line, 169.53 in the spider monthly chart. So we're holding above our breakout, which is still bullish. Weekly chart here holding up well. Again, the uptrend line on the weekly chart, we're above the 20-day, above the 50, and well above the 200-day moving average. Bullish. There's nothing wrong with this chart at all. We are also in our uptrend channel, breaking out from new highs. Nothing wrong with the weekly and the monthly chart. Now, the daily on the SPY is a little different than the cash, right? We were at the break line here. We have broken out of this downtrend line. All right, so now on the spiders, bullish symmetry now is beginning, right? I'm sorry, bearish symmetry we just broke out of from our lower highs, and now we're breaking back out of it. So this is bullish. So now what I want to see is I want to see this guy right here, where our uptrend channel, and this is where we're going to probably need to hold. This is going to be the line in sand for the bears right here, 166.45. And if we do break that 166.45, or we hold and start to roll lower, then I'm going to be looking to short the market. Now, if we break out of this, I'm going to buy probably the next pullback. And that, I'm talking about intraday. I'm not looking to hold anything at the moment. Now, this here is the 60-minute chart. As you can see, bearish symmetry, right? Downtrend line. We had a descending triangle. We had a break below the descending triangle. Now we're breaking back up again. And now we had a bull flag from the line, from this little guy right here. We just broke out of it, and we closed at the highs. So bullish symmetry has formed on a 60-minute chart. So we want to see it. We want to see this continue and take out this area here, 164.50, 165, and then I think you're going to at least test R3 and get into the high area here, if that were to happen. But if we look for failure, then I'm going to look for that 165-ish area, on 164.50 to fail, and then roll over again. Now here is the diamonds. As you can see here, bounced off. Same thing. Now we're back testing this little symmetrical triangle that we did have here, back end to the 20-day moving average. Okay, so now we're back testing the 20. So it's going to be a critical day today to see what happens. Here is the head and shoulders, and I mentioned that we had the leader bearish pattern. We broke below it. We had triggered. Now I say let's look for the back test, right? And that's exactly what we're getting. But this candle, to me, is quite bullish. We have a very large engulfing candle here, and we're at our lows in our stochastics and MACD, so we could easily recover and start breaking out again. That's why I never like selling the first break of the head and shoulders pattern unless you're scalping it. If you're scalping it, that's one thing, but if you're just breaking down and then you look for the back test, I'm looking for a bigger picture downside retracement to this area here. So I will be looking for failure to take out Friday's lows, and then of course the 50-day moving average, and then we can really start to accelerate to the downside. So look for clues on the transports this week as well. IWMs, not as a big move here. This is also again concerning for the bears, right? It's a good gauge of risk, and we had the big transports move higher, where we did have a little bit nominal gain in the Russell. So again, not too good. Look at Goldman Sachs, another bullish bull flag. Boom, huge move to the upside. Huge move to the upside on Friday. So again, looking really good here. We did break out, and then now we're moving higher again. Again, when the yields go higher, it's good for banks. Take a look at the XLF. Another big move higher. We took back at least a 2 days move. That's why here, this index is strong. So if you're looking to buy a pullback, you want to be looking for the banks. That's a big, strong sector here. And we had Apple. Apple did move a little higher, as you can see, but still holding within this range here. So Apple's really not doing much. Very odd the way it's been trading lately. So, but we'll see what happens. Again, got to break out the 455, or if we break out the 430, we're going to test these lows again at 419. So Apple is really in no man's land at the moment. And then of course the Qs on the weekly chart, and lastly is the Qs on the daily chart here. As you can see here, tech has been doing pretty well too. Big cap tech's been doing really well. All right, guys. A lot of econ data this week, so pay attention to the calendar. Let's see what happens today and tomorrow. If we do get a breakout above Friday's high, then I think it looks like we're probably going to test the highs again, believe it or not. This is a buying dip market. Unfortunately for the bears, if you're a bear, you got to be really careful and start picking your spots here. Now, if we fail on a closing basis and take out the low of that day, that confirmation day, then I'll be looking to short the market as well. Okay, have a great day. Be careful out there. Use your stops. Take care.